What's going on, everybody? Welcome back to the channel. Ryan Huggins here. I am winning, and so are you guys. So today we got a great video. We're going to talk about some price analysis. We're going to be going over quite a few coins. We do have altcoin season here, so that's really exciting. Bitcoin is just kind of consolidating and chilling. And what we've noticed with Ethereum and Litecoin, they're basically running the same exact pattern as Bitcoin. So let's go ahead and jump into the charts here. Stay tuned till the end. Don't forget to like and subscribe to the channel. Here we go. January 18th, BTC, ETH, DOT, XRP, ADA, LTC, BCH, Link, XLM, and BNB. We're going to cover some of these coins here, probably the top 5 and 6, because we're definitely going to get to Litecoin. So let's go ahead and jump in here. Altcoins are beginning to lose bullish momentum as Bitcoin price struggles to reclaim $40,000. Investors are beginning to worry that Bitcoin's BTC uptrend could be in peril after the top-ranked cryptocurrency failed to pull above the $40,000 range. Some traders are afraid that a repeat of the crushing 2018 bear market is on the cards again if BTC fails to find bullish momentum. However, a study of both the bull markets shows distinct differences that are noteworthy. Research from Pantera Capital found that after the current bull move, 86% of crypto markets value is concentrated in Bitcoin and also Ethereum, largely because institutional funds have flowed into each cryptocurrency. In 2017, the top 2 coins only held about 52% of value, with the rest being held in several altcoins that turned out to be non-functioning coins. In the current bull market, retail investors seem to be largely absent, so the type of speculation witnessed in 2017 has yet to appear in 2021. Guggenheim Partners Chief Investment Officer Scott Minerd recently said that his long-term Bitcoin price target was $400,000 remains, and his recent tweet asking his followers to take some money off the table was based on the short-term price movement. Although Minerd has not included Bitcoin in his mutual fund portfolios, he said purchases have been done in some private funds managed by Guggenheim. While Bitcoin consolidates after the recent bull phase, select altcoins are extending their up move. Can this continue? Let's analyze the charts for the top 10 cryptocurrencies and find out. Bitcoin, BTC, is attempting to rebound off the 20-day exponential moving average of 34,380, but the weak bounce suggests the lack of urgency among bulls to accumulate on dips. As the price is stuck inside of a symmetrical triangle, technical traders may wait for the price breakout of the pattern before buying. If the price does not rise to the resistance line of the symmetrical triangle, the bears may smell an opportunity and will try to sink the price below the triangle. If they succeed, the BTC USD pair may drop to the 38.2% Fibonacci retracement level at 29,688.10 cents. This is an important level to watch out for, because if the bears sink the price below this support, the drop could extend to the 50-day simple moving average of 26,932. And the deeper the fall, the longer it is likely to take for the uptrend to resume, because every rise will be met with a wave of selling by traders who are stuck at higher levels. Another sharp correction could be avoided if the bulls thrust the price above the triangle. The all-time high at 41,959.63 may act as a stiff resistance, but if the bulls can drive the price above, the pair could reach $50,000. So let's take a look at the chart here. All right, so as you can see here, these different colored boxes here are the Fibonacci retracement levels, and this is the 0.78, 0.618, 0.5, 0.382, which was talked about here. So you can see that it dipped down to that 0.382 inside of this symmetrical triangle here. So what they're talking about is resistance line of the symmetrical triangles here. If this price can come up to this line and then break through that line, that is for a bullish move, and then look for $50,000. If it's driving down, if it continues to drive down and pop through here, then look for that retracement all the way down here to the 26,932 level. And then you can see here on the RSI, it's right there in the middle at about 58%. We want to see it up here for the bullish move. So right now it literally is in limbo. ETH remains in a strong uptrend and is currently consolidating near the $1,300 to 1,349.10 overhead resistance. The upsloping moving averages and relative strength index RSI near the overbought zone suggests the path of least resistance is to the upside. Ether USD pair formed a doji candlestick pattern on January 17th and again today, indicating indecision between the bulls and the bears. If the uncertainty resolves to the upside, then the bulls push the price above the overhead resistance and the uptrend could resume. The next target is 1,420 and then of course 1,675. On the contrary, if the price turns down from the current levels and breaks below 1152, the pair could drop to the 20-day EMA, $1,079. A strong rebound off this support will suggest accumulation at lower levels, and the bulls will again try to resume the uptrend. However, if the bears sink the price below the 20-day EMA, the decline could deepen to $1,000 and then even $900. So let's take a look at the chart here on Ether. So this is the one-day chart. And as you can see here, the price is going up, okay? It ran up here to 1,300 and it definitely rejected off that. It came back down and bounced off the 900. And what's interesting, that was all in one day, that huge move there, and then bouncing back up. It did hit that resistance level. Doji candles, meaning this right here, it's a wick on top and bottom. And there was no candle body 2 days in a row, indecision. So we'll see today whether it moves up or down. If it comes down, it's going to bounce off these moving averages. And if it goes up and breaks through here, then we're looking for that bullish trend to continue. Polkadot, DOT, is in a strong uptrend, and the momentum picked up after the altcoin broke above the $10.68 resistance on January 13th. The up move reached $19.40 on January 16th, recording a 143% rally in 4 days. Some short-term traders may have booked profits after the sharp rally, but the shallow correction suggests that the majority of the traders are not panicking. If the bears fail to pull the price below the 38.2 Fibonacci retracement level at $14.72, the uptrend will resume. If the bulls can push the price above $20, the dot pair could rally to $24 and then $30. However, if the bears sink the price below $14.72, the pair may consolidate the recent gains for a few days before starting the next trending move. The bears will signal a comeback if they can sustain the price below the 20-day EMA. $11.47. So if we take a look here, DOT was running up and it ran up to the $19.40 level. It has come down for a small retracement down to this section here on the Fibonacci, okay? Now the next Fibonacci is down here, which is 1472, or like they're saying, the EMA all the way down here at $11.47. So we'll see if this rebounds today, so keep an eye on that. If this becomes a new support and runs that up there for the DOT USD pair. XRP, what's up XRP? So the bears have been defending the 20-day EMA at 29 cents for the past few days, but they have not been able to capitalize on the weakness and sink XRP below 25 cents, which suggests a lack of sellers at lower levels. The bulls will now attempt to push the price above the 20-day EMA. If they succeed, the XRP USD pair may rally to 38 cents. The bears are likely to defend the resistance aggressively. If the price turns down from the resistance, the pair could extend its stay inside the range for a few more days. On the other hand, if the bulls push the price above the range of the 50-day SMA 40 cents, a new uptrend could begin. All right, so here is the XRP chart here for the day. So you can see, obviously we were down here and it was bouncing off this 16 cent level. It then ran back up. We got it all the way up to 38 cents. And it's just been kind of sitting here at this level. Here is that moving average they're talking about. And if this can push above that moving average, then we'll see it try to move up above the 38 cent level. And then we can see if it'll bust through this moving average as well. And then it goes all the way up, which would be super nice. So if it can go through the 50 EMA or the 50 EMA and also break this 38.50 resistance, then we could see a bullish move coming back for XRP, which would be really exciting. Cardano ADA soared above the downtrend line of January 16th, signaling the resumption of the uptrend. The bulls pushed the price near the overhead resistance at 40 cents on January 17th, which may act as a stiff barrier. However, the upsloping moving averages and RSI in the overbought zone suggest that the bulls are in command. If the bulls do not allow the price to dip and sustain below 34 cents, the likelihood of a break above 40 cents increases. The next target on the upside is 50 cents. Contrary to this assumption, if the bears sink the price below the 34 cent mark, it will suggest aggressive profit booking at higher levels, and the ADA USD pair could then drop to the 20-day EMA. A strong rebound off the 20-day EMA could keep up the uptrend intact, but a break below it may signal a short-term dip. So here is the chart for Cardano. Here was the downtrend line that it was in that small time frame downtrend there for a minute, and then it did bust through there significantly with a great engulfing candle there, and then it continued, but now it is kind of just sitting here. So we need to see if it can break this resistance and continue its uptrend. If not, it may come down to the moving average here, the EMA, and if it hits this and rebounds, then it'll show signs of the bullish move. If it breaks down below that, then we're looking for the bearish trend. Litecoin, LTC, USD, the bulls and the bears have been battling it out near the 20-day EMA of $144 for the past few days. The buyers are currently trying to push Litecoin above the 61.8% Fibonacci retracement level at $157.69. If they succeed, the LTC USD pair could rally to $170 and then $185. A breakout of the resistance could open the doors for a rally to $225. However, the bears are unlikely to give up without a fight. They will pose a stiff challenge at $157.69. If the price turns down from this resistance, the pair remain range bound between 130 and 160 for a few days. The trend will turn in favor of the bears if they can sink and sustain the price below the 50-day SMA of $118. All right, and here is the Litecoin chart here. You can see that it did come down and it's rebounding off of this area here, and it did come up above this EMA, the 20-day EMA, and it's above it. The candle actually closed above the line, which is really good news. So we're going to see now if it can maintain its push up all the way back to the 185 mark and then continue above and beyond that new resistance level. So that was the price analysis for you guys today. Hope that was really helpful for you. Please don't forget to like this video, and also please don't forget to subscribe to the channel. We're on our way to 1,111 subscribers and we need your help. I am winning, so are you. Have a great day.